Hello dear Forex traders, welcome to IFC Markets. You are watching weekly market overview made by IFC Markets. Let's start. Last week the US dollar rose against most of its counterparts. The currency index advanced by 0.9%. The Japanese yen was the only one among the major currencies which managed not to lose value and even strengthened by 0.5%. The largest underperformers were the Australian dollar with a result of minus 1.4%, the euro having lost 1.3%, and the Swiss franc that dropped by 1%. The British pound and the Canadian dollar were less compliant, having lost 0.5% and 0.1% respectively. The dollar rally cannot be called full-scale yet, but upcoming events may contribute to its strengthening. Last week, some rough data from the United States kept uncertainty about the timing of QE tapering. Orders for durable goods dropped, personal expenses were lower than expected. But we would like to draw attention to two indicators. GDP growth in the second quarter has been revised from 1.7% to 2.5%, and the initial jobless claims are at pre-crisis levels. These facts, in our opinion, leave a high probability of tapering in the near future. Though the August non-farm report to be released this Friday will be definitely the key one. Markets expect a payrolls figure around 180,000, but we also look forward to an upward revision of the previous number. If the forecasts are correct, the dollar can gain support before the meeting of the regulator, which is taking place on September 18th. But even apart from the unemployment data from the United States, the week promises to be very interesting regarding the number and importance of events. On Tuesday, the meeting of the Reserve Bank of Australia will be held. The GDP data for Switzerland for the second quarter will be published, and in the evening ISM manufacturing index in the States will be released. On Wednesday, the news flow will continue with the release of Australia's GDP for the second quarter, followed by the Bank of Canada meeting. On Thursday morning, the Bank of Japan will announce its monetary policy decision, and in the afternoon, the Bank of England and the ECB will take the word. Finally, employment data for the US and Canada will complete this week. According to the latest report of the Commodity Futures Trading Commission, futures market participants have somewhat increased net long speculative position on the European currency, which at the moment seems to us somewhat excessive. However, significant net short speculative positions on the Japanese yen, the Australian dollar, the British pound and the Canadian dollar are maintained. Last week, major changes in the positioning were observed in the direction of increasing net short positions on the Canadian dollar, the yen and the Australian dollar. Returning to the short-term picture, we note that although large-scale appreciation of the dollar, which we are still waiting for in the second half of the year, has not yet fully started. The decline of the US currency has currently stalled as key support levels were able to hold pressure. Now, markets are definitely waiting for more clarity in further actions by the Fed and for the August employment report. If the data is in line with forecasts, our main scenario involving reduction of QE in September will be confirmed, so we prefer short strategic positions on the euro, pound, yen and Canadian dollar. Meanwhile, the pair euro-dollar, as we expected, rebounded from the top of a 6-month range, settled close to 1.34. We continue to believe that further growth of the pair would require much more consistent signs of economic recovery in the Eurozone, and most importantly, the refusal of the Federal Reserve to reduce purchases in September. The pair pound-dollar also faced resistance at 1.57. Sell signals appeared, and the drop to 1.55 was triggered. The dollar-yen seems to have broken the downward dynamic resistance line, as we also expected, and can now head to a test of 100. You are watching Weekly Market Overview by IFC Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.